Morning, ladies and gentlemen. My name is Greg Michaelowski, and this is the Forex commentary for FXStreet.com for Friday, October 15th, 2010. Today, we have Federal Reserve Chairman Bernanke speaking at 8:15 this morning. We also have retail sales of the U.S. CPI. We have Michigan consumer confidence, all coming out this morning. All is going to have an effect on the currency markets. So let's get into some of our currency pairs, see what kind of risks we have, and where the key levels are for your trading here today. We'll start off by looking at the euro versus US dollar. What is significant about this currency pair is we had this nice bull flag here in trading, and then we broke out back to the upside here last night in trading. We did move below the bottom side of this trend line here, but when that failed, gave the bulls the ammunition to buy off of that line and push the market to the upside, breaking through the trend line at this point right here and surging up to the back to the underside of the trend line from this channel, from this mast, from this flagpole, if you will, and found that resistance at the 141. 12 area and sold off from that point. Currently, we're trading at 140.98. If you were to move up to this trend line back up here, it'll come in at 141.27. That would be the next level of resistance and more or less correspond with the highs that we saw this week at the 141.21 level. So watch for resistance up at the 21 to 27 level on the top side for the euro versus US dollar in trading here today. Off the 5-minute chart, this is telling me only because the market, if you take the low to the high trading range for the day, which went from 140.08 to 141.12, about 104 pips exactly, 38.2% retracement of that move, held the downside here at 140.72 level. That is significant. That will be eyed as key support here today. If the market should break through that 38.2, it would also be breaking through the 100-bar moving average in the 5-minute chart, and that should give a good reason for profit-taking selling in the euro movement back to the downside. We'd also be down below the low for the day at that point. So watch that level on the downside. On the top side, watch our 21 to 27 level. We break above that level, and the bias certainly moves to the upside, and further upside potential is probably warranted from a technical basis. On the sterling versus US dollar, the 5-minute chart is most telling here, gives the most clues here. Why? Because we have 1, 2, 3 different highs off the 5-minute chart over the last couple days. On the downside, we have 1, 2, 3, 4 different lows down at the bottom side. So the lows and the highs are defined here in this currency pair. On the corrective move to the downside, the 38.2% retracement was not able to be breached, and we are above the 100-bar moving average as well. Watch these two levels, 38.2. Watch the 100-bar moving average. I think those levels will give us our bias for the day in the early New York trading. We move below that level, we should see further selling. Move above this level, of course, and we're going to see further buying for the sterling versus US dollar. Taking a look at the daily chart, the sterling, this currency pair is above the 61.8% retracement, is above the old highs going back to this date on August 9th that came in at the 159.95 level. So that is going to be another key level on the downside, getting below 159.95. If the market should rotate back to the downside, would be bearish for the sterling versus US dollar. So keep that level in mind of the in the dollar versus yen. What we have here is the market moved up to this top trend line here, connecting these highs. It's also parallel with this line right here, parallel with this line up here. So we have some symmetry, although the market did get below this. This line goes back to this low right here, connecting to this low right here. This is on September 30th. We broke below that level on Sunday's trading, Friday's trading, then Sunday's trading, and also broke below the level yesterday in early trading towards we went to the new low for the day, low for this move at 80.88. The market was able to bounce off of that level, move back above the line, come back and check this top side trend line, but not able to get through it either yesterday or today. That's bearish for the currency pair, and that's where we saw the movement to the downside. Now this old trend line comes in at 81.03, so let's call it 81 even, and then below that level is the low from yesterday at 80.88. So that's where the dollar yen seems to be heading toward. On the top side, where's the risk? The risk risk. We have to get through the 100 bar moving average, 81.23, and then the 200 bar moving average, 81.35. You can see here the market held 100 for most part here, moved up to the high when it broke through that 100, came down to the 200, and then broke through, used the 200 as resistance. So these levels are coming to play for the dollar versus yen. The final currency pair I want to take a look at is the dollar versus Canada on an hourly basis. What is significant here is that over the last few weeks, the market has been able to stay below the 100 and 200 bar moving average. This is a 200-hour moving average. Look how the market came when it broke through the 100, came up, tested the 200, came up, tested the 200. Each time the market failed. At this point right here, we kind of did a quasi in between the 100 and the 200, tested the 100 and failed. We also try to test the 100 here, but then broke through to the 200. Now today, what do? We come up and test the 100 bar moving average on the 100-hour moving average. Went right up to that line. I'll zoom in right here, right up to that line, and fell off from that level. So needless to say, this level of par 76 is going to be a key level for the dollar versus Canada. Taking a look at the 5-minute chart, we went down and tested the 100 and 200 bar moving average as the market consolidates. The trading today after the move higher yesterday, break below these levels right here at the 105.13, and we see a further rotation on the par. I'm sorry, that's par 51 level, and we see a further rotation to the downside for the dollar Canada, with the lows for the day being the next target at the 26 level. This is Greg Michaelowski with a Forex commentary look for FX Street. Have a great day trading.